Let's find some day trades, swing trades, and option trades. We are 3 hours into trading right now, and it is May 26th. Let's see what's going on in the market. We had an explosive move through the 200-day moving average this morning. You can see here how the S&P 500 opened above the 200-day moving average. We're currently drifting back a little bit, but this was a big move. There's been some news on the vaccine front. We've got a lot of companies. It doesn't matter which company. They all are very close to finding some type of vaccine. And we've heard that from Moderna last week. That stock helped to propel us right up until that 295 level on the SPY. And then the next day we found out that the clinical trials weren't quite what they expected. And the market pulled back, but instantly reversed the next day. So it doesn't matter if it's Merck, Moderna, NVAX. I could go on and on. I could list you 10 different companies who feel they're close to a vaccine. Somebody is going to figure something out by year end. And so that's already built into the market. I think the more important part of this equation, though, is that everyone's watching to see what happens with consumers. And based on what I saw this weekend, people are getting back to their old normal lifestyles. I didn't see a lot of social distancing going on. I saw big groups of people. That tells me that the fear factor is much reduced. I live in Illinois. A little bit different in Illinois than it is in Wisconsin, where they're fully open, but a lot of people from Illinois go to Wisconsin. So they may wear masks in Illinois, but they sure don't when they go to Wisconsin. In any case, I've polled some people in the chat room, and it seems like the same thing that I'm observing here is happening nationwide. So the bottom line is that people want to get back to their normal lives. So that tells me that once they go back to work, that their consumption and their spending patterns are going to continue, and that this recovery should gain traction with each and every week. That's why I believe the market is starting to move higher, and that was the missing piece of the puzzle. We didn't know how long this shutdown would last. We didn't know how people would react. In many cases and in many states, they were protesting because they wanted to get back to work. So there's a lot of pressure put on politicians right now. We're seeing the percentage of new cases decline in states like Florida and Georgia that have been completely open. So the threat of a resurgence is very minimal, at least from the data that I've seen. People are realizing this, and I think that this bodes well for an economic recovery. Now, this doesn't mean that we have to go out rushing in to buy, because this is it. We're never going to get another chance to buy. I think that Q2 is going to be very, very soft in terms of corporate earnings, and we have CEOs who have reiterated that. They've said time and time again, Q2 will be worse than Q1, and we don't know what Q3 has in store either, so this is going to be a process. And that tells me that we don't want to be out there buying calls right now. We want to stick to our guns. We want to sell out of the money bullish put spreads. We were able to leg out of SHAK, Shack. We bought back our short call, and this morning we were able to sell our long call position. We were able to leg out of that for a small profit, and that was the last of our bearish call spreads. Every other position that we have on right now is a bullish put spread. We tried to get 4 bullish put spreads on last week, and we had negative price action in the stocks that we're trying to sell those put spreads on Thursday and Friday. And the fact that we still couldn't get filled on those told me that nobody wanted to sell them to us. So lo and behold, when we reopened Tuesday morning, we had a huge gap higher. I also posted a video last night on a stock that I like, NVDA, and I posted that to YouTube. So let's bring up that chart. We're all able to get filled on that spread. And you can see right here, the stock did pull back. Now you might think, hey, wait a minute. I thought we were bullish on this. We are. Well, the market's up and the stock is down. Yep. Well, the reason for that is that we're seeing a rotation out of a lot of the leaders. A lot of the really, really strong stocks are actually pulling back today. Well, why might that be? It's because we're seeing rotation out of these really strong names and into some of the cyclicals. Banks have been strong. Retail has been strong. Energy has been strong. So that's the rotation that's currently taking place. So the fact that NVDA may be down a little bit today, that's okay. We still like the stock longer term, and we sold the 340 put and we bought the 337.50 put spread, and we did that for a credit of 40 cents, and I'm still expecting that closing price right there at 340 to hold through the end of the week. Now, if that spread expires worthless on Friday, we only have to wait another 4 days, 3.5 days. We're going to make a 20% return on that. That's beautiful. Your margin requirement on that is the difference in the strike prices, which in this case is $2.50. We get to apply the credit that we received, which is 40 cents. So your margin requirement per contract is $2.10. For a one lot, it'd be $210. For a 10 lot spread, it's $2,100, and that will yield us a $400 profit on Friday if it expires worthless and the stock stays above $340. If the stock closes below $340, I'm going to get out of that trade. I'm going to exit. That will mean that it's filling in this gap and that it's probably going to reverse this breakout. But for right now, I like what I see. You can see long tails under body. You can see the support level holding right here. So NVDA. If you haven't subscribed to the YouTube channel and you haven't turned on your notifications, you should do so right now. I can post these videos at any time. If I see something I like, I'm going to post it. And if you subscribe and turn on your notifications, you'll never miss these trades. So let's take a look and see what else we've got. Right now, I am bullish on the market. I have a neutral to slightly bullish bias. I think that this is still going to take time. I'm not looking to chase anything. So take a deep breath, look for stocks that you really want to be in, see if there's some bullish put spreads that can be sold, and know that we're getting a little bit of a rotation into some of the cyclical stocks. So right here, I've got a relative 30 search up, relative strength 30. So this would be stocks that have strength. I'm going to put up my 5-minute chart, and here you can see we've got a deep 10P cross, which is bullish right in here. That tells us we can start getting bullish and buying stocks. And until we see a spike like that, we're going to stay long, and then we're going to take profits in it. So early today, you can see how we had a bearish cross right in here. So it's telling us to be careful on the open. We get a bullish cross right in here. We got long in there, some really nice stocks. Made a little bit of money. Here we go into a compression. We're getting a bearish cross. It's saying be careful, get out of your longs. Then we get a little bit of a pullback. So I think that the way the day is shaping up, if I draw a line connecting these highs right here, so let's do that. I'm going to connect an alert line. I'm going to use that high right there, and I'm going to use that bar right there. You can see that it's already violated that downward sloping trend line. So I'm just going to draw a horizontal alert line right there so that I know if we're getting near the upper end of the range. I believe that we're going to see a little bit of a bounce in here. It's a very quiet day. This is a post-holiday trading session. Normally, there's not a lot that takes place, but I am going to be looking for some bullish stocks right now. So let's take a look and see what we've got. This is a good list for us to take a look at. So I'm going to go into a 5-minute chart. I'm just going to click through a couple of these, and we'll see if there's some price action we want to take advantage of. That's nice. KLAC. Take a look at that daily chart. You can see how it's trying to push through this resistance level, but it's got more resistance not too far away. Not one of my favorite picks. I'd like to see it through that resistance. Just going to continue to click down. PH is Parker Hannifin. They are involved in the oil industry, so they're catching a bit of a bid. URI, that's a nice breakout through horizontal resistance. It finds support at the 100-day moving average. Now it's moving higher. PH also moving through that 100-day moving average. Long green candle closing on its high right now. CMI, another cyclical stock trying to get through horizontal resistance. Not really seeing anything I like out of this group right now because I'm not going to be buying heavy equipment stocks. The oil industry, yes, but I think you have to be very selective right there. Goldman Sachs looks pretty good. In fact, a lot of the banks are starting to break out through horizontal resistance. Goldman Sachs looks pretty good. We've got the 100-day moving average right there. Bank stocks don't typically move much, so these are ideal for selling out of the money premium. MS is one that you might want to consider. I like this horizontal resistance level that it just broke through. Now that's horizontal support. You might be looking at selling a $41 put, maybe buying a 40.50, doing that for a 10-cent credit. And that also works because there's 50 cents between the strike prices. We bring in a dime. That means we've got to put up 40 cents to make 10 cents. That's a 25% return on investment. So I like that one as well. I'm going to go in and take a look at a couple of other searches. We'll see what's in heavy buying. You can see JPM. I would stay away from RCL and a lot of the travel and entertainment stocks, the casino stocks. I think it's going to be a little bit longer until they can get back on track. So I'd be a little bit cautious there. So I'm going to put up two stocks that I found earlier today that I like. I like NKE. I like that breakout through the 100-day moving average right there. It is an apparel stock though, so I'm a little bit cautious again there, but they're still able to do a lot of online sales, and a lot of online retailers are also selling their product. But I'm going to put up VLO because I do like that. You know, I've liked that stock for a while. We've got this nice little breakout here through horizontal resistance, and we've got the 100-day moving average there. That comes into play right around that $65 level. So I would feel pretty comfortable selling a 65-64 bullish put spread on VLO. Let's put up that trade right in here. Take a look at that. Let me see if I can get that going. And let's see here, VLO. I've got the 65-64 right in here. I actually did that spread earlier today. I got 18 cents for that. Did a ton lot. So actually I did that for a 12-cent credit, a little bit less than I might normally take in, but I'm still okay with that trade because I feel that, excuse me, I'm sorry, I did get an 18-cent credit for it. I just hovered over the wrong one. There you can see at the very tail end of that pop-up, it's for an 18-cent credit. So I sold that 65-64 bullish put spread for an 18-cent credit, and that expires Friday as long as the stock stays above $65. So I like that. I also like NSC. I'm going to pull up that chart. NSC, you can see how it's through horizontal resistance. It's through the 100-day moving average. And there on NSC, I like selling the May 29, the 175 puts, and I like buying the 172.50 puts. That one I did for a 38-cent credit, so I'm going to bring that back over here, and we'll put that up. And there you can see it right up here. Sold the 175 puts, bought the May 29 172.50 puts, did that for a 38-cent credit. Normally I'd like to get 50 cents, but we're only a couple of days away from expiration. Here it's Tuesday midday. We've got 3 days after today till expiration. I feel pretty safe about that, and it's a very short-term trade, and I like the fact that the stock is through that 100-day moving average, so that looks very, very good. So put spread, you're probably not going to be able to get that kind of credit right now, given that some time has elapsed. Even a few hours when you've only got 3 days left until expiration matters. But I think you can go longer term on NSC and still key off of that 175 support level and that 100-day moving average, and maybe go out another week or two and really bring in some nice premium on that. And VLO, same thing. There you can go out a little bit further in time, still get that spread done, focus on that horizontal support area right now, sell that spread. I should also mention, I always like to go back and take a look at the stocks that I highlighted the day before. CRON was one that I told you Friday, set up really well for day trading. I told you right about in here was where the video came out. I told you I like this. I think there's a short squeeze setting up on it. You can see how the stock went from about $6.40, closed somewhere in the $6.80 range. That's beautiful. 40-cent gain on a $6.50 stock is fantastic. And you can see how the stock pulled back a little bit this morning, but it's right back up near its high and near its close from Friday. A lot of the pot stocks are actually strong. Let's take a look at TLRY. That's the other one that I showed you. You can see how that one's really moving higher here from $10 to $11 just in the last hour of trading or so. So really nice price action there. Those are a couple others that you might consider. But right now, From a day trading standpoint, I think you've got to be relatively cautious right in here. We have a lackluster market. We've got a slightly downward sloping channel here, and we've got the market trying to find support. We've got 1-2 tests of that support level, big gap in here. The fact that we haven't seen a big retracement today, the fact that SPY 300 is held very, very firm, I think is a good sign. I think that we could see a nice strong close. And if we start moving higher and higher, grinding higher this week, there could be some underallocated asset managers who have FOMO, fear of missing out, and you could start to see them chase a little bit. Me personally, I'm not doing any trades unless I get my price. And the type of setup that I'm looking for is I don't mind selling premium on laggards that are just starting to catch a bid as long as they've been kind of hovering around a support level, establishing support just like VLO, and now getting through a major resistance level and getting through major moving averages. Those I like because I can still stay pretty close to that support level and sell premium and take advantage of what I believe will be continued upward momentum. But I'm keeping those trades inside of 2 weeks. I want to be able to constantly evaluate those positions. I want to constantly be able to evaluate what's going on in the market, and I want to maximize on that time premium decay. So I'm able to do all of that by selling very short-term, out of the money bullish put spreads. That's the strategy I'm using, and then I'm continuing to just roll those positions and look for new opportunities as the market continues to inch higher. That's all I've got for you today. If you like the content, please give it a thumbs up. Also, please make sure to subscribe to the YouTube channel and turn on your notifications. If you're like me, you've never subscribed to YouTube or a YouTube channel, and you sure have never turned on your notifications because there's nothing that worthwhile. But I will tell you that that's the only way you can get my videos instantly, and they will have content in there. They'll have trades that are actionable right here, right now, plus lots of education. So please do that. Then you'll never miss one of these trades. Thanks so much. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.